Hey everyone, welcome to another video on the channel. Today we're going to be taking another look at Zim Integrated Shipping Services, also known by the ticker symbol ZIM, Zim. So, earnings are coming up for Zim this Wednesday, August 17th, so I thought it would be useful to kind of just do a brief kind of rundown and see where Zim currently stands and what we might be able to expect from earnings. So looking to the chart, we could see that Zim really hasn't moved a whole lot since the last time we've talked about it. We could see that it looked like it hopefully reached this bottom in the beginning of July, and ever since then it's been making higher highs and higher lows. We could see this past Friday we had a bit of a fake out where the stock price dropped just at open over 7%. But then, as the day went on, it recovered. It ended the day just down about 2%. So you could see, on the one hand, there's this big spike in volume on that drop, which not really a good sign because maybe that was an institutional investor that was dumping their shares, or maybe some Wall Street guys were trying to create some downward momentum. But if that was their plan, clearly it failed because the stock continued to recover the whole day, which I think is more of a good thing. On the one hand, yeah, somebody dumping their shares maybe isn't the best, but the fact that it was able to recover so significantly throughout the whole rest of the day, to me, just says that people saw, wow, the stock is at a discount, I better pick up some shares. So that part's good news. And again, we can see it continues this pattern of making higher lows, higher highs. Here we just made another higher low from the other lows, and hopefully we'll make a higher high. So all of that is well and good, but what else is going on with Zim? What else is going on with the stock and the company? Well, I wanted to bring up this article. We can get to it. Zim invests in tracking solutions firm. So we could see that Zim did just invest $5.5 million in this tracking solutions provider, Hoopu Systems. Now, I think this is a great investment for Zim. What the company does works on tracking solutions for maritime industries, for specifically dry containers, just to make it easier for them to track and keep an account of all their inventory and whatnot. And this is something that's going to increase substantially, hopefully, the efficiency of Zim. And you could see that as well. They had earlier invested another $5 million in another scanning technology developer, Sodio, which would also increase their efficiency and help their bottom line business, which the fact that Zim is making these kind of investments, I could see only as a positive. They don't feel constrained. They don't feel worried that, oh no, money might run out. We better hold on to every dollar. And, they're willing to make these sorts of investments, which to me says that they don't foresee some kind of event which might diminish their bottom line or diminish their cash reserves. So that's good. But I also wanted to touch upon the fact that, a lot of people know Zim or got interested in Zim because of course, their massive dividend that they paid earlier. And so I saw this article by Motley Fool. I thought was interesting, for good and ill, because on the one hand, they do talk about the fact that, the dividend yield on Zim is insane, but is it sustainable? And I thought, they kind of did just say, oh no, it's not sustainable. This is just a red herring kind of a thing. But their reasoning I thought was interesting, and I thought it was almost more beneficial than negative on Zim, because whether or not the 48% yield is sustainable, what caused that yield? What put Zim in a position to make that 48% yield? And as the article says, it's because back in 2019, Zim was reporting operating profits of 114 million. Then in 2021, that 114 million went up all the way up to 5.8 billion. So within 2 years, they had operating profits go from 114 million to 5.8 billion. And so obviously, when you're seeing that kind of exponential growth, that's what allowed them to pay that 17 per share dividend earlier this year, and that's what's kind of fueling their dividend and stock growth since then. But what this article is essentially saying why it's not sustainable is because they're saying, well, shipping rates are going to calm down, or they have been slowly calming down. And once that happens, that's really going to affect Zim's bottom line, and they're not going to be able to maintain anywhere near that sort of growth. So as we've said in the past, I do think it's worth looking at the what those shipping rates are. So if we look at the dry bulk index over here, I thought this was interesting because it is really correlated to Zim stock price. So let's scroll down a little bit. Here's the dry bulk index, and we could see we were really high, in 2021, and over the course of this year, we've had a bit of ups and downs. We had this time where it shot up in May and June, and it's just been trending down and down ever since. And as we know, Zim stock is very closely correlated to this Baltic Dry Index price. So on the one hand, that gives us some food for thought in terms of if prices will continue to trend down. Obviously, that'll mean that Zim stock price may also trend down, and they may not be able to pay such dividends, and that would be negative for the stock. Although, as we said before, they are making investments that'll help their bottom line business. And also, I think that personally, I'm not a financial advisor, but even if the shipping rates do not go up to their peak, they're still elevated. They've been elevated. I think they may well continue to be elevated, given the fact that we still do have all these supply chain issues. I mean, people have been saying, oh, they're going to calm down next year for like 3 years. I mean, when have they calmed down? Are they going to come down this year? Are they going to come down next year? I mean, maybe, but it hasn't happened really yet. Or to the extent it has, it's happened kind of bit by bit. And then further supply chain issues occur. So just something to consider that, yeah, the shipping rates are really critical, but what's to say that they're not going to remain elevated, even if they don't remain at their peaks? So getting right down to it, what do we have to look forward to for this week concerning Zim? We know that they do report their earnings this Wednesday, and so, I mean, what can we expect from the earnings? I already did a video on Star Bulk Shipping, SBLK, and as we said, they crushed their earnings. They had a great earnings report. So will Zim face something similar? Is this an industry-wide boon to the shipping industry? Well, hopefully. I mean, as we can see here, there is some concern that increased fuel prices as well as escalated voyage operating expenses may damage Zim's bottom line. But, I mean, take it with a grain of salt, because I feel like we had high fuel prices last quarter, and they absolutely devastated it. We had high fuel prices have been going on for a while, and they may have peaked, they may go back up, but either way, they're down from their peak. So, I don't know if that's necessarily the be and end all, although definitely something to keep in mind. But what we're expecting, or what the analysts are expecting, so the company reported $14.19 earnings per share last quarter. And they beat the top analyst consensus estimates of $12.65 per quarter. So they beat by $1.54, which is a very strong beat. They reported $3.72 billion in revenue for the quarter and had a net margin of 45.36% and return on equity of 167.57%. So all that's old news, So that's great to see in terms of their past performance. They were absolutely crushing it. But what's happening this quarter? So analysts on Wednesday are expecting the company to announce earnings of $12.16 per quarter. So down a bit from last quarter, but let's see if they could beat it, because, as we said, Starbuck beat it. Some other carriers have been beating it. Will Zim be able to beat it? I'm optimistic that they will be. I don't have any additional inside information or anything, but just based on the company's being able to beat expectations in the past and other carriers who, are similarly positioned to Zim are beating it. So I'm optimistic that Zim would beat. And potentially, as we discussed with Starbuck, maybe we could potentially see a run-up when they, granted they will announce a dividend being paid sometime in the next few weeks. So we could potentially see a run-up of investors. It may not be the $17 dividend that we had seen in the past, but we could still see a similar increased interest in retail and in the investment community. So we'll be on the lookout, but that's kind of where we stand with Zim. I mean, I'll definitely do a video after they report earnings on the 17th, so be on the lookout for that. But I'm pretty optimistic to Zim, but again, I'm not a financial advisor. Do your own due diligence, but let me know what you think in the comments below. If you're holding Zim, if you're going to buy more Zim, if you're going to sell it. I'm always interested in what you're doing with your shares, and I'll catch you in the next one.